Hello everyone, welcome back. It's been millions of days since I stopped sharing any video on either YouTube or Telegram, but I decided to do analytical videos analyzing charts of boom and crash starting from 2019 April to 2020. We are going to see each and every part of boom and crash on 1 hour, 4 hour and also 15 minutes for entries. So we're going to see all of these. Of course, this video will be only episode 1. There will be tons of episodes coming out. So I'm going to share this video either on free channel, VIP and YouTube. This episode will be absolutely free for everyone, but the coming out episodes will be only available on the VIP group. So the basic terminologies in which the binary assets are working, here we have, let me explain this. There is a code which was uploaded to the binary server on April 2019, starting from the very beginning. So that code only works on the code which has been uploaded. It doesn't matter what is happening on the world. It's not dependent on the current market situations. So this code will run in either case. Either there will be market crash, stock crash, or everything will run depending on the code. So there is a code and then there is a server, binary server. So this code runs on the binary server every day. It's open 24/7. As you know, boom and crash can be traded 24/7. And then there are retail traders. All traders which are trading like you and me, we are here. Everyone is trading on desktop, laptop, mobile phone and tablet. So we are trading against software. We are not trading against traders. We are not trading against any broker. There is a code on binary broker, so we are trading against the code. So the thing that can make you profitable on this one is only understanding how the market works, how this algorithm is running. So you need to understand how the code is working. Of course, you cannot know what code it is and you cannot read the code because it's only available on the binary server unless you can hack into the server. So the only option we have is understanding the past charts from boom and crash. That's why I'm going to share the charts from the past, like starting from April 2019. We are going to see each and every analysis on boom and crash. So let's come back to part 1, the episode 1 of this part. So part 1 will be the basic terminologies, like all of you know: support, resistance, trend lines in chart patterns. I'm going to explain briefly, of course, not to take time. I'm going to explain briefly what support is, resistance is, trend line in chart patterns are. So these basic terminologies, they are very crucial while trading every day. So these are not only important to trade boom and crash. You can use these terminologies in currencies, stock markets, and also other types of future tradings. So let's come back to what these each trades are. So the first trade is support. Support means it's a demand level. You can take this as a floor of one building. Let's say we have a house like this and we have a floor. So this floor can be taken as a support. Whenever you come back, like let's say there is a ball, whenever this ball comes down to the floor, it will bounce up, right? So this floor acts as a support. In market also, when price comes back to a support level, it will be bounced up. If it has a momentum, of course, it can break the support. So we'll talk about that later. So this is support. You can take simply as a floor. And we have also ceiling in the building. That ceiling is called a resistance. In market, whenever price goes up to that ceiling, it will be bounced back to the floor. So it's very simple terminology. We have two things. The first one is resistance up there and we have support down here. So the support can be taken as a floor and the resistance can be taken as ceiling. So if you have a ball which is bouncing in the hole, it goes up, touches the ceiling, and it comes back to the floor. Then it bounces back to the ceiling from the floor. It continues like this. But if that ball has a momentum or a force to break that ceiling, it will go up. Or if it has a momentum to break this support or the floor, of course it will go down. So this is the basic concept of resistance. The other one is trend line. We have a trend line. Market always moves in three phases. The first phase is sideways. It consolidates like this, goes up and down. And the second phase is downtrend. Market comes down, goes up, corrects itself, comes down, corrects itself. It continues like this. This is called a downtrend. The third phase of market is uptrend, which is the opposite of downtrend. So the market goes up, comes down, goes up, comes down. It corrects itself, and the total direction of the market will be upward like this. So we have three market phases: consolidation phase, downtrend, and uptrend. So far we have discussed support, resistance, trend lines. The last one is chart pattern. These are very crucial for entries. So if you want to take sniper entries, you have to know what chart patterns are. So chart patterns are very crucial for entries. I have shared a PDF on VIP group for VIP members. It has only 71 pages. So we have the basic chart patterns there included, like triangle pattern, rectangle pattern, double bottom, triple bottom, double top, also triple top. There are tons of patterns, but the basic ones are explained on that PDF, so you can get from the VIP. But I'm going to explain the basic ones here. So we have triangle pattern here like this. Market will come back, go up, touch this line. So the market moves like this and creates a triangle pattern. So if the market manages to break upside, it goes up and we take entry here. We are going to discuss this each and everything in detail. So I'm going to explain this one briefly, so you don't have to worry. So the first one is a triangle like this. The second one is double bottom pattern like this. So we have two equal bottoms. So the market managed to break this trend line, no, neckline. So we take an entry at the retest or either immediately after breakout. So there are different types of chart patterns like this: triangle pattern, double top pattern, tons of patterns are there. So now I'll go to binary or derivative to see how the charts are going on. We have Boom 1000 here. This is Boom 1000 from April 2019. They started on April 17. So starting from April 17, we will go through each and every part. This is 1 hour chart. So I'm going to show you how to draw trend lines, how to identify chart patterns like triangle, like double bottom, triple bottom, and every type of patterns. There are tons of patterns out there, and how to identify support and resistance. All you need to do is sit back, relax, and watch this video. So I will analyze step by step. This is Boom 1000 1 hour time frame. I'll start from the beginning. Okay, we have clearly uptrend here. The market is on uptrend, it's moving upward, so I can draw trend line like this. To draw trend line, you only need to identify rejection points like this. So we have wicks here, we have another wick here, we have another 2 wicks here. So if we connect these wicks together, we get a trend line like this. Then we wait for the market to break and retest. If you are aggressive trader, of course you can trade a breakout. As soon as the market breaks the trend line, you can enter. Let's say the market broke out here with a big momentum. So the 1 hour time frame, on 1 hour time frame, the candlestick closed like this. So let's say you enter here. If you are aggressive trader if you don't want to wait for a retest. So you enter here, the market moves against you. Where are you going to put your stop loss? If you enter here, you're going to put probably like 43 points. That means $43 on 0.5 lot size. If you put your stop loss above here, you'll be stopped out. So it's better to wait for retest. That's why I'm going to show you how to take sniper entry here. So we drew a trend line like this. So we wait for the market to break out of the trend line. As you see, the market broke the trend line. But while waiting for a retest, you have to draw the confluence points. You have to identify the reversal points where the market has been rejected many times. So we have a reversal here at this point, at this point, and at this point. So we can connect these 3 points together by a box. Just draw a box connecting these points together. It's very easy. So now we drew our box. The market rejected here, the first rejection, the second rejection, and third one. If the market comes back to this area fourth time, it will be rejected. So what are we waiting for? We're waiting for the market to come back to this area and retest. Then we take a sniper entry. As you see, the market broke the trend line here. So without reaching this box, it reversed it here. So it doesn't matter. If you lose an opportunity, it's okay. Wait for another opportunity. There are millions of opportunities out there. Boom and crash can be traded 24/7. So don't worry. So we missed opportunity here because the market hasn't reached our box yet. So we can put sell limit at this point, right? So put a sell limit and go back to your normal life, watch movies or go to work if you have 9 to 5 work. So you put a sell limit at this red line. As you can see, the market came back to this point at this point. So you are in immediately after you got in. The market drop all the way down. This will be 186 points. So 186 points on 0.5 lot size on Boom 1000. This is quite a lot amount of money. So you make easy money just by putting sell limit, analyzing the market, waiting for the market to break out of the trend line. You identify the confluence points, put sell limit, done. $186 on 0.5 lot size. Where you are going to put your stop loss, it's easy, just above the box, just above the confluence points. So I'll put my stop loss above this box. My stop loss will be here, my entry will be here, and you can follow the market with the profit. Like all these candles are of course red. There will be no correction in this one, but sometimes the market corrects itself like this part. It goes down and corrects itself by going up. So what are you going to do here? If you have a small account, you need to have your own plan. Like if you want to make let's say if you want to make $20 on one position, if you make that $20, take your profit and get out. But if you have big amount of money on your account, identify the confluence points. I will say here I have a confluence point. You see this, the starting point of Boom 1000 on April, the bottom one, the swing low. Yeah, that point will be my take profit. So I will take my profit here. I will enter here. I will take my profit here. That will be $100 on 0.5. That's quite enough for the first trade. Now let's move into the next one. The first one is easy, right? There is a trend line. The market breaks that trend line. You draw a confluence point. It comes back to that test. Easy, you say. Then we have the market consolidating here. You see this area, right? In these points, the market has been going up and down without any uptrend or downtrend. So what you need to do is you need to put a box here. Just draw a rough box like this, which includes that consolidation. So the market was here, came down, you took a profit, right? So again it returned back, came back. So we have another small consolidation inside, so we can draw another small box here for sniper entry, right? So inside the bigger box we have the smaller box, so we zoom into our small box to take a sniper entry. So we have the market which is consolidating inside this smaller box. Market is up here, down, up, down, up. So we don't know if the market is going to break upside or downside. We know when the market, like exactly at that point, when the market breaks the smaller rectangle at this point, and also the larger box. Just to be sure, you don't have to trade, you don't have to sell exactly when the market breaks the smaller box. Wait for the market to break the outer box also, because we drew this box for confirmation, right? The market has been consolidating on this area. If you go to 4-hour chart, yeah, 4-hour chart will be like this. So exactly the market is swinging inside this large box. Then we have the smaller box. The market decided to break here from the smaller box, but you don't have to take a trade right there. You have to wait for the larger box also to be broken. So let's get back to 1 hour for sniper entry. Okay, of course trading a consolidation is very risky. I would recommend trading trend lines and chart patterns, but sometimes it's good to trade breakout from the consolidation. If you see this one, it's very easy. It broke the smaller box, then again it broke the larger box here. Definitely I will take my trade exactly below this point. You see this rejection right here, right? This rejection. So below that rejection I will take a trade. If the market hasn't been rejected at this point, yeah, it has been rejected, then it managed to go down, so you can take your entry just below this rejection. Voila, it's easy. Take a sell here exactly at this line, then follow the market. So in your favor, the market moves down. This will be like 175 or something like that. So it's easy. It's not about making money actually. I mean, like, yeah, I know you have to make money, but you have to focus on the process. You cannot flip your account in 1 day or 2 days. It might take 1 week or it might take 1 month. Like, let's say you face loss today, so that will be recovered tomorrow. Sometimes, like, there will be losses. You cannot make money consistently, like every day winning. No, you cannot win every day. Sometimes there are losses. The thing that you need to know is how to manage that loss, how to increase your win, how to increase your win rate, and how to decrease your loss rate. So now we want 2 trades. Yeah, the first one is at the start, the second one is breakout from the consolidation. So we have 2 wins in a row. Now let's move on. Let's see if we get another opportunity. Of course, you have to make your chart very clean like this. There should be no indicators, there should be no RSI, no moving average, because it will help you to see the clear image of chart, the chart patterns, the consolidating market, and everything that's happening in the market. So you need to make your chart very clean like this. Okay, now I see uptrend right here. You see this point, right? The market went up, corrected itself, went up, corrected itself. So it's creating higher highs and higher lows. That means the market is clearly on uptrend. So you draw a trend line like this connecting the wicks or the rejections. It's very easy. So I drew a trend line like this. So I have a market which is going up, moving up, touching the trend line, getting rejected, creating higher highs and creating higher lows. So what you need to do is just sit back and wait for the market to break the trend line. You don't have to enter a buy on the, like, when the market comes back to the trend line like this, I'll take advantage, I'll take a buy position. No, you don't have to, because you don't know what's going to happen on that trend line. Trend lines are confluence areas. The market may break or may bounce up. So wait, since this is uptrend, of course, if you are a trend trader, you can trade a confluence zones like this. I'll show you. Pick any confluence zone like this, then draw a box. I chose this point because there are rejections here, multiple rejections, 1 2 3 4 rejections. Then again the market was rejected here at this point. It came up and reversed it back. So here it managed to break that point, of course. Then it came back here at this point. You see this area, right? So it got reversed. So we have 1 2 3 confirmed reversals at this box. That means if the market comes back to this area exactly at the trend line, you can take a buy advantage. You can buy on this little box right here. So this will be another opportunity, of course, if you are scalping or if you are trading the trend line, since this is uptrend. So now I'll remove these lines and the box. So while waiting for the market to break the trend line, of course the market broke here. The trend line has been broken. So you need to wait for retest, right? So while waiting for retest, you have to put your box always. Your box always contains confluence zones or reversal points. We have a reversal here, rejection, again another rejection, and we have also 2 weeks here. You just need to figure out where the market has reversed, especially if they are at the same level. It's very good. So here we have rejections and reversals at the same level, right? The first rejection and reversal here, reversal again here, and we have 2 weeks here or rejections. So this box will be a confirmed zone that can act as a retest zone or an entry point. So after breaking this area, so the market broke like this. The market broke the trend line like this. So you have to wait for retest, right? So put a sell limit right here. Let me put the horizontal line here. So this will be 97.37. At 97.37 you put a sell limit, because sometimes you may miss entries, like doing something or going outside the city. You may lose entry, like sniper entries. So not to miss like this kind of sniper entries, put sell limit. Put sell limit there. Put your stop loss just above the rejections here, or measure the point if you have a small account, of course. Let's measure how much it is if you enter here. Okay, that will be $26 on 0.5. $26. Manage your account, calculate the win, calculate the reward, then put your sell limit here, put your stop loss here. Boom, the market crashed from your entry down here. This will be about $171. If you zoom out, you can of course manage when to exit and when to take your profit. So you can, if you are short-term trader, you can take your profit here at this point, because we have rejections here and reversals. And if you want to hold your position, of course you can take your profit at the bottom of the trend line. The starting point of the trend line will be you take profit from a swing trade, or maybe it may take days. So this is it. We got another win. This will be the third one. Market broke the trend line, retested, and it went down. So let's remove all these lines and let's move on. Let's see if we get another opportunities. I see descending triangle here. To know what descending and ascending triangles are, of course you have to get that PDF. If you can manage to get the PDF from internet, it's okay, you can, but otherwise if you are a member of VIP, I have shared it, you have the chart patterns there. So here we have a descending triangle pattern. Then I'll draw a box connecting the rejections. So I'll wait for the market to break the trend line, the triangle. While waiting, the market broke this descending triangle. Then the market went all the way down. So if I measure this will be how much? $174 on 0.5 lot size only. That's it. That's how you make money. Identify the chart patterns, identify support and resistance. Again, I see another chart pattern here. Let's see. This pattern is called rising wedge. It's called a rising wedge. So let's zoom in. The reason I drew this rising wedge is because the market reversed it here, again reverse it here, and from the downside we have rejections here. At this point, market reverse it here, another rejection here, and another rejection. So if you connect those rejections together from the lower side and from the upper side, of course you will get a triangle. It looks like a triangle, but it's called a rising wedge. So wait for the market to break either upside or downside. So the market managed to break downside here. So you enter, let's say immediately after breaking this point, you enter at the rejection level. So before you got stopped out, how much this will be? This will be $101 on 0.5 lot size. This is also a small win, but you gotta keep your money. So this is it. Let's clean our chart and move on. Always remember to clean your chart from past days, like it will help you to see clearly. Now we have the bottom line here, so I'll show you. This will be the last one for this video. There is a chart pattern called triple bottom. Triple bottom, let's get back to our chart. Okay, I'll show you here. Triple pattern is like this. The market will come back down, then it reverse, comes back to the same level, then gets rejected, then again it comes back and gets rejected. So when you see the market in this kind of pattern, what you need to do is you have to draw your boxes like this. Connect the higher points, then also connect the lower points together. So we have three bottom points at the same level. That's why it's called triple bottom. The pattern is called triple bottom because we have three equal points at the bottom. So if the market creates this kind of pattern, what you need to do is after drawing your support and resistance or the confluence areas like this, wait for the market to break the neckline. This is called neckline. So if the market managed to break this trend, this neckline, that means the market has momentum to go up. That means the trend line, like market was on downtrend, it created triple bottom here. So finally it broke the neckline. That means if it retakes this back or either way, it has a momentum to go up or for a trend reversal from downtrend to uptrend. So what you need to do is, if you see this kind of pattern, take advantage immediately after the breakout from the neckline. So let's get back to chart pattern on Boom 1000. So here we have triple bottom, three equal bottoms at this point. If you see, we have a rejection 1 here, rejection 2 here, and rejection 3. Then we have a neckline also. You see these points, just connect those all rejections or reversal points at the same level, then you get the neckline and the bottom point. So we have 3 equal bottoms and also a neckline. Finally, the market broke upside. It managed to break the neckline. So what you need to do is wait for the market to come back and retest that neckline for safe entry. So we will take a trade here, or we will put a buy limit exactly above the neckline. So I'll put my buy limit here. Yeah, you put a buy limit, then put your stop loss by measuring or calculating your risk and reward ratio. So I'll put my stop loss at the midway between the pattern. Then boom, all the way up. This will be profit 179. This is it. This is how you trade. This is how you identify the chart patterns. Always identify support, identify the resistance, chart patterns and everything. Then put your sell limit or buy limit, not to miss entries, not to miss sniper entries, and also don't forget stop loss, of course. So this is it. This is episode 1, and another episodes will be coming out on the VIP. See you next time.